Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of AVNET, a massive electronic component distributor. Think of them as the middleman for all those tiny parts that make your phone, computer, and even your car work. We are about to pull apart their latest financial report, so buckle up because today we are finding out if AVNET's been playing with live wires or if their circuit is on overload. Here is the hook. AVNET reported a sales decrease of almost 9% this quarter, but made more money than last quarter. So how do you make less and earn more? Well, let's find out. AVNET has just released its Form 10Q, which is basically a quarterly checkup for investors. This report gives us a look under the hood at how the company's been doing for the quarter that ended in March. First things first, AVNET is a pretty big player. They are incorporated in New York, and you can find their principal executive offices down in Phoenix, Arizona. They are traded on the NASDAQ with the ticker symbol AVT. So now that we have the legalities aside, let's dive into the meat of this report. Time to discuss numbers. We need to go to the balance sheets. It shows what the company owns and what it owes. Now remember, these numbers are in thousands, so we will add 3 zeros to everything. First, let's check out their assets. Cash and cash equivalents. That's like their savings account stands at around $189 million. Let's find out where that went later. So they've spent nearly $120 million. Let's find out where that went later. Accounts receivable, which is money owed to AVNET, is $4.11 billion. Then we have got inventories, the stuff sitting in their warehouses ready to be sold. That's $5 billion. Altogether, their total assets add up to $11.7 billion. On the other side of the balance sheet, we have got liabilities, which is what AVNET owes. Short-term debt is $14.5 million, so good for shareholders, but to their suppliers is $3.49 billion size. Good for shareholders. Now let's head over to their income statement, or as I like to call it, the moneymaker. This tells us how AVNET performed over the last 3 months. Sales clocked in at $5.78 tons. Last year, cost of sales, or how much it cost them to get the product to sell, that's $4.7 billion last year. Cost of sales, or how much it cost them to get the product to sell, that's $4.7 billion last year. Cost of sales, or how much it cost them to get the product to sell, that's $4.788 million. Then we have got the operating expenses like salaries and marketing at $435 million. After subtracting those, we get an operating income of $143 million. So after we count other bits and pieces, their final net income is $87.9 million, is $87.01 earnings per share after the cost of stock options. Alrighty, let's briefly move on to comprehensive income. Net income is again that $87.9 million. The adjustments for currency translations, pension plans, etc. get us to a total comprehensive income of $171 million for AVNET. Next, we have the statement of shareholders' equity. It's a bit like a report card for the company's ownership. Looking at 9 months, we started back in June with $4.9 billion in total shareholders' equity. Then we add net income, subtract cash dividends, deduct repurchases of common stock, and account for stock-based compensation. And after all is said and done, we end up with total equity of $4.9 billion, up with total equity of $4.9 billion, up with total equity of $4.9 billion. At the $9 billion, up with total equity of $4.9 billion, up with total equity of $4.9 billion at the end of March. Nearly unchanged. Time to talk about cash. This is the good stuff because it shows the actual cash coming in and out of the business. From operations, they generated $585 million, mostly from moving inventory. They burned almost $614 million on financing activities. That includes paying down debt, buying back shares, and paying out dividends. Lastly, investing activities, which includes purchases of equipment, used $77.5 million. So when we add it all up, their cash decreased by $120. Lastly, investing activities, which includes purchases of equipment, used $77.50, which does live. Equipment used $77.5 million. So when we add it all up, their cash decreased by $120 million on financing activities. That includes paying down debt, buying back shares, and paying out dividends. Lastly, investing activities, which includes purchases of equipment, used $77.5 million. So when we add it all up, their cash decreased by $120 million. Jumping now from the statement to all the notes in the fillings, let's talk about a couple things. The filing mentions that there were reclassifications made to the previous year's numbers, so things might look a tiny bit different compared to what we saw before. Also, there were changes to goodwill, a somewhat opaque concept. It's essentially the value of a company's reputation or brand that is not based on tangible assets. They closed last year with a goodwill of $780 million, and now it's $795 million, an increase of $14 million of good news. Now let's check if there's anything interesting with how much the business owes. Well, it appears that during January they had a new amendment with a credit facility and extended it to 2030. We also have a section about derivative financial instruments. These are kind of like financial side bets to hedge their risk. AVNET uses these mainly in the form of currency swaps to protect themselves from fluctuations in exchange rates since they operate globally. Time for some possible bad news: commitments and contingencies. This is where companies disclose any potential legal problems. AVNET says they are involved in various lawsuits, claims, and other legal proceedings, but they do not expect any of these things to have a major impact. They also mention that they are setting aside about $11.7 million for some compliance-related legal matters. I love talking about taxes. Let's see AVNET's. AVNET had a tax benefit this quarter. In other words, they paid less than they should have by law. I know it's complicated, but what you should really be looking for here is something weird like zero tax and millions in revenue, or the inverse. And there is not anything weird, so it's not interesting. Now let's move on to how AVNET breaks down its business. They operate through two main segments: electronic components and Farnell. Electronic components sales in that segment were down about 6% compared to last year, mostly because the market for electronics is down. What is doing well? Their operating income in that segment is $172 million. Their other segment is Farnell, which also had sales down with double digits. However, their operating income only was $11 million. Now it's time to discuss restructuring expenses. Restructuring is when a company reorganizes itself to try and become more efficient, which often means cutting costs. They are taking charges to lower SG&A expenses, primarily in their group Farnell, to cut expenses. However, it appears they have paid most of the money to begin these restructuring tasks, with the remainder to be done by the end of the fiscal year. Now, for market risks, AVNET is exposed to changes in interest rates and currency exchange rates. Since they operate all over the world, these risks are something they have to keep an eye on. They use things like hedges to try to minimize those risks. It is important to note, however, that AVNET mentions their evaluation of disclosure controls and procedures, which are designed to ensure they get all the right info and are reporting it correctly. Basically, it's AVNET saying they have got their house in order and are ready to put out a reliable picture of their financial health. Okay, legal proceedings. AVNET is currently subject to certain pending and potential legal matters and investigations. However, they believe that the resolution of such matters will not have a material adverse effect. So what does all of this mean for AVNET? The company appears to be facing some headwinds, sales are down, and they are having to restructure to try and improve their efficiency. There are a few key risks to keep an eye on. The global electronic components market is cyclical, so AVNET's performance is tied to those ups and downs. They depend heavily on their relationships with key suppliers, so any disruption there could hurt. They have to deal with risks related to international sales and operations like currency fluctuations and trade restrictions. However, on the other hand, that decrease of almost 10% in revenue somehow leads to net income, and the CEO and CFO confirmed that they are filing accurately and legally all the numbers. So what's my opinion on AVNET quote? Well, AVNET is in a bit of a tough spot right now. The numbers don't lie. Sales are down, and that hits their profit margins. They are making the changes that they need to survive the current environment, such as lowering operating expenses through layoffs and facility restructuring. If they can effectively manage their risks and capitalize on any opportunities in the market, AVNET could come out stronger on the other side. They also have a great opportunity from their cash from operations, a strength that few businesses their size could have. It's a huge potential to either strengthen and make acquisitions or make bad bets. This needs watching. Overall, I give them a wait and see. Keep a close eye for their next report if you're planning on making an investment. Thanks for tuning in to Corporate Decoder. If you enjoyed this forensic analysis of AVNET, make sure to hit that like button, leave a comment with your thoughts, and subscribe for more deep dives into the world of corporate finance.